All right. Well, hello everyone, and welcome to today's event. I'm Jason Gumpert from msdynamicsworld.com. Thanks for joining us for a new event looking at the importance of AP automation for finance executives. I'm joined by David Leonard, VP of Sales for Financial Document Automation at Bottomline Technologies. David is a returning speaker for us. It's always great to have him with us. And as we get started, please know that you can add your feedback and ask questions during the event. You can use the Q&A block that you should see to the right of the webcast slides to ask your questions at any point. David will be making time at the end to answer some questions. So without further delay, please allow me to welcome David Leonard to get things started.
Well, thank you, Jason, and it's good to be back, and I appreciate everybody's time in joining today's session. As Jason noted, my name is Dave Leonard, and with Bottomline Technologies, and I'm speaking to you today from Raleigh, North Carolina. And thanks again for taking time out of your busy days to join this session. And for the next 45 minutes or so, I'm going to look to draw upon my 20 years of experience in this financial document automation space, along with combined industry studies and research to help you share information and learn more about leveraging Dynamics AX to meet your executive AP expectations. We'll begin by looking at why senior finance executives are looking to accounts payable to help them achieve strategic enterprise-wide goals. Ultimately revealing one of the main problems confronted by AP departments and the four components of what we see as being associated with AP automation that delivers strategic benefits, and these include streamlining workflows associated with routing and approvals, automated indexing and storage, obtaining integration with Dynamics AX in a real-time fashion, then being able to look at key performance indicators and tailored reporting to drive results. Now, along the way, we'll highlight how some organizations have leveraged their Dynamics AX platform combined with an AP solution to transform their AP department and meet those executive goals. So we can see some real-time examples. Now, we know that financial decision-making is a balancing act, and senior executives, they have to balance the priorities such as corporate growth, profits, and cash flow against concerns around debt, regulation, and cost of goods. And keeping these priorities and concerns in balance requires tremendous financial insights, including insights in the areas such as those that are historically lack visibility, and one of those being the accounts payable department. And that's where our focus, of course, is today. Now, having visibility into accounts payable is needed to achieve those strategic enterprise-wide goals related to improved spend management that results in a greater on-time payment performance, also associated with a cash flow analysis, and this often leads to optimizing your working capital, and not to mention just an overall better supplier relations, among many other things. Now, better visibility is one of the top strategic objectives on the accounts payable agenda for finance executives. In a recent IOFM study, an amazing 69% of controllers indicate that improving visibility in the cash flow and cash management is among their top priorities. Additionally, 2/3 of controllers report that developing effective measures to gain visibility into overall performance of finance and administration functions is also among their top priorities. So we can see right off the bat that visibility is one of the key drivers, is that lack of knowing what's going on with all that spend is at the top of their list. The simple fact is, paper is still very prevalent throughout accounts payable processes. Yes, there's been a lot of advances in technology, whether it's through EDI and e-invoicing, but paper is still very, very prevalent, and it's not going away anytime soon. And this severely limits visibility in one of several ways. Key data is not captured up front to expose the information for visibility purposes. I can't see what I don't know about, right? Information and access to the data is not readily available. Picking up the phone and sending emails and asking and requesting information is not an effective way to get the details you're looking for. Systems are often very fragmented, meaning that things are not always up to date, or better yet, what I mean by that is real time. And decision makers cannot access critical variables as AP invoices move around the organization, such as there's no way of knowing the status of what's going on. So as long as this data is trapped on paper invoices and manual paper, and you have manual processes associated with that, AP departments will never have the timely insights and analytics they need to support them. And it is for this reason that senior finance executives are taking a greater interest in accounts payable automation. So it's no secret that automation delivers tremendous benefits. For example, the Aberdeen Group reports that compared to their peers, companies that invest and implement best-in-class accounts payable solutions have more than 4 times the rate of visibility into overall organizational cash flow on a day-to-day basis. In addition, they saw a great reduction in their days payable outstanding, sometimes by as much as 13 days, and over 60% decrease in their invoice processing costs. Those are tremendous savings that can be obtained by an investment into an AP solution. So let's take a close look at how they achieve such results. We start by looking at the 4 areas, and we'll focus on those 4 very key areas that are strategic components of AP automation that deliver the financial visibility and strategic benefits. And they are highlighted in our agendas at the top of the session here. And those start with streamlined workflow, again, automated indexing and storage, all the while being able to maintain very, very tight integration between the accounts payable process and your ERP system, in this case Dynamics AX, and reporting that is specific to the needs of the stakeholders throughout the process. Each stakeholder has their own specific needs of what they want to be able to report on, so it's important to be able to tailor it and tailor those reports right down to what's needed on that and the information needed for them specifically. So let's drill into that streamlined workflow a little bit more. Now, we noted a moment ago that paper is the root of a lot of the problems that are associated with an inefficient AP process. And a study done by the Institute of Financial Operations showed that accounts payable departments can take up to 25 days to process just a single invoice, from receipt of that invoice all the way through to payment approval. Invoices without a purchase order or basically what some people call non-goods orders, those typically involve an approval process that encompass multiple touch points and can take even longer. So some companies are very PO-centric, done a lot of the approval processes up front, which does help in a lot of ways. But then you got those that are balancing the rest of it with a very non-PO-centric process. Now with proper investment, you could take those paper-based environments and get rid of the messiness that's associated with them. Now, if you think about a typical geographically dispersed company, which a lot of people are these days, you have people remote all over the country and sometimes around the globe, the accounts payable staff often has to scan invoices. They turn around and they'll email it in if there's an exception to the appropriate individual, and that recipient opens it up. They print it out, only to turn around and make notes, and they sign it and approve it, if you will, rescan it, and then email it off to the next person, and it's just that iterative process over and over and over again, and ultimately winds up back in the AP department for further processing, only to see that if there's something that's not right, it might have to go right back out. And this just obviously leads to just a lot of inefficiencies and things getting lost in the shuffle, et cetera, et cetera. And it's compounded if the invoices wind up going to the recipient first versus going to a centralized, like a shared service center. So every step in this manual process is time-consuming and it's very expensive. Plus, there's no easy way of determining the status of the invoice along the way. You don't know where it's at, who owns it, how long they've had it, are they doing anything with it, is it on hold, is it waiting for feedback, et cetera. And a lack of visibility into invoice routing opens the door to things like lost invoices. Obviously, there's a potential for late payment penalties, missed opportunities to capture early payment discounts, perhaps, and then just overall poor supplier, relations, because all these things are just coming in very slowly and being processed and without visibility to it. So with that said, what our financial executives are looking for is improving the speed in which things get done. So workflow solutions automatically will route invoices that require approval, such as a non-purchase order invoice, or even PO exceptions for that matter, based on predefined rules, so things can get moved through the system in a very efficient manner. Now, a result of this, AP departments that do invest in AP automation are able to process invoices up to 74% faster in one study, and that's opposed to, of course, doing it manually. And this is achieved as a result of automating things like the matching process of invoices. So if it's a purchase order invoice, being able to match it straight through, right down to the line level detail, so you can almost have no touch points. It also includes things like electronic routing of invoices that require approval. So it's based on rules that goes from person A to B to C in parallel, so that individuals who might have to touch it can just be simultaneously doing their approval processes. And then there's also the reduction of manual keying throughout the process. And what we mean by that is that it doesn't mean that somebody has to take something, write it down, then somebody else has to transpose it and put it in somewhere else. In some cases, we can automatically populate information to have it automatically put in so that people don't have to key it all together. And that's an overall, efficient way of how you would move things through the process much, much faster. Now, without workflow automation, you'll see here that only 48% of payments in one study are made on time. That's a study done by IOFM. But the rate of on-time payments jumps to a median of 90% when those payables departments incorporate even a modest level of automation. So once again, automation just stands out in terms of one of the key benefits that it can drive as much more efficient means of payments. In addition to eliminating late payments, accelerating the invoice approval cycles can provide organizations with even more opportunities to capture early payment discounts. This sometimes gets lost in the shuffle, and although they might be achieving that with some of their key vendors, some of those low-lying fruit, if you will, of vendors out there who do still have early payment discounts, you can actually see those come into the fold by having an automation solution. And over time, those discounts can add up. So put differently, imagine a company of $1 billion in turnover and revenues. They could achieve as much as over $1 million in annual savings and payment discounts, according to benchmark data from the Hackett Group. So again, a lot of it's tied to your spend and how much spend there is associated with those early payment discounts. But those are some studies that show it can be quite excessive. Now let's take a look at a real-life example. So you've got a Fortune 500 company such as Avnet, which is one of the world's largest distributors of electronic parts, enterprise computing, and storage products. And you'll notice that one of their divisions, Avnet EM, which is a subsidiary actually, provides services and solutions to a broad base of more than 100,000 customers and 300 suppliers. And it's also the hub of a very complex supply chain process, but they actually do more than 750,000 invoices a year. So this is kind of on the upper tier of what you see from an invoice volume perspective. So just imagine the inefficiencies of not having an AP automation when you're processing that many invoices. The company streamlined its invoice processes with automation to reduce the manual touch points, and they achieved very high levels of straight-through processing. And that was because they were able to, rather than that being PO-based, they were able to take information and automatically get it passed straight through because everything got matched up automatically. And they took a scanning solution and to do that, and then as an ongoing improvement, they were able to enable themselves to drive other significant improvements in the invoice process and even other methods of automation above and beyond that. Now, as you can see, they've seen the cost of processing inbound invoices drop by over €5 per invoice alone. So we talked about the cost of invoices. Now imagine in this example just dropping €5. That many invoices per year, that's a pretty substantial savings. And information now flows directly from supplier invoices into Avnet's system via that automated solution. And this cuts those costs out and ensures that any errors are highlighted quickly to enable fast resolution. And it's important that it's not just the fact that it finds an exception, but it points out what the exception is. So decisions can be made automatically to help accelerate it through the process. Additionally, AP solution was able to reinforce Avnet's supplier relationships while providing a strong platform for the adoption of supply chain finance. Now, we go on to the next component that we looked at as part of one of the 4 things that finance executives are looking for, and that is automated indexing and storage. So it's how do you get rid of it? You got this paper, you want to get rid of the paper, but you got to be able to store it somewhere, and you got to be able to index that information. So physically storing those documents, it makes it difficult to retrieve and access the invoices over time because it's bound to these filing cabinets, and sometimes it's going off-site. In fact, 2/3 of organizations say that invoices, purchase orders, other correspondence, and supporting documentation are just hard to access and find in general. And to make matters worse, geographically dispersed personnel must wait for documents to be retrieved, much less get copied and faxed or emailed. A lot of things are just done via email these days. And that goes all the way through back to the vendors themselves that request a copy if need be. So physical document storage, hinders an organization's ability to comply with audits or regulations. And without automation, audits can turn into immensely expensive and time-consuming exercises that require staff to just rifle through filing cabinets and storage bins and retrieve things from off-site storage and bring them back in and establish clear audit trails. In addition, physical document storage is very expensive, and storing paper documents off-site, as I mentioned, it creates a vast issues with visibility and much less cost to be able to pull that information back. Now, electronic imaging and archiving capabilities ensure that invoices are easily accessible because now they're online and they're accessible to all authorized staff, whether that's within the AP department itself, to people in the field, to auditors, and even those on the go via mobile device. So therefore, invoices can be electronically linked to other related documents, such as an invoice that's PO-based. You can perhaps go and see a copy of the purchase order, perhaps a copy of the check. If there's a receipt document that's being scanned and stored, all these can be brought together and very easily accessible and automatically pulled together and related without having to manually collate. And it also includes ad hoc information such as emails, etc., so it can provide a very comprehensive view of each invoice. And it's for these reasons that nearly 45% of controllers surveyed by IOFM reported that deploying an image repository for document archival and retrieval was among their technology priorities. So we look at another example. Here's a company, Service Systems Associate. Automation vastly improved their processes and mainly into the visibility of those invoice statuses, audit history, and reporting, while reducing the paper storage and overnight shipping costs for payments. So there's some really hard dollar savings that they're able to retain. Now, SSA provides service amenities in U.S. aquariums, zoos, and museums, serving more than 27 million visitors per year. So it's a rapidly growing number of locations, and has a relatively small staff of only 1.5 FTEs. But that makes it increasingly difficult for them to manage some 3,500 invoices a month while it's growing. And so after an extensive evaluation of various AP solutions, SSA deployed one, and they found that by having it integrated with Dynamics accounting software, they were able to achieve a lot of the results that we just mentioned a moment ago, which is automating the process so they have greater visibility into the invoice status, and then reducing the money it spends each year on overnight shipping. You can see here that they were able to cut out some $7,000 a year on shipping costs alone. And then on top of that, they were also saving an additional $7,000 a year on the physical storage and copy. So getting rid of that paper, storing it electronically, making it accessible, just in those two areas, that one area alone, you can see this organization was able to see some significant savings. So those are two primary components. One of the other things that executives are looking for is to make sure that an AP solution is very tightly integrated. They don't want it to be a silo, and that it's very hard to integrate and create more touch points. So with that, if we look closely there, that we see that there's oftentimes multiple systems at play when it comes to accounts payable, right? So corporate accounts payable functions must interface with not only Dynamics, but also with General Ledger, budget management, other systems, other devices. Unfortunately, that integration is often either non-existent or in some cases encumbered with manual data entry requirements. So when systems are not well integrated, the result can be very foggy and can obscure invoice status, invoice volumes, metrics such as operator productivity, and then exceptions processing that are processed, it slows down, and invoice interactions cannot be tracked and monitored very efficiently. So how do we overcome that? Well, with a lot of AP solutions, right, there's a capture piece that's a vital part to the process, scan those documents in or even receive them by email. And then there's also the need to have all the workflow that we just mentioned a moment ago as one of the other key components, and having this all accessible online. So best-in-class AP solutions will enable all these processes through tight integration without expensive customization and or training and getting all these systems to work together, much less the need to buy additional user licenses. That's one thing you want to stay away from, is the user licenses within your ERP system. Now, these advanced solutions can be linked directly to Dynamics, starting from an initial capture process, as I mentioned, all the way through to two-way or three-way matching, reporting, routings, approvals, et cetera, et cetera. And this 363-degree view provides visibility into the financial information through that tight integration of the accounts payable, and Dynamics provides decision makers with the strategic insights they need. And those insights they need are there to be able to make accurately forecast cash flows, make fluid decisions about keeping cash versus taking supplier discounts, gaining leverage in negotiations with suppliers. They're able to more easily analyze and spend patterns, and not to mention identify opportunities to optimize electronic payment, as we mentioned a moment ago. So tight integration is a very, very key aspect, not just the fact that it's integrated, but integrated in a real-time fashion. So if we look at an organization such as ASSA ABLOY, a security company, they gained a full view of its financials by integrating an AP solution with its ERP system. And that company is divided into two global and three regional divisions. So they're very dispersed and different processes within those different groupings. And with more than 40 companies and approximately 44,000 employees worldwide, they had to just get a much, much better handle and control of their AP automation. And they needed to be able to do that with some very, very tight integration, quite frankly, tight integration across multiple systems at that. Now, previously, they'd used an accounts payable solution that was not integrated. It was totally external. It was totally disjointed. There was a lot of file integration that went on behind the scenes, which basically resulted in more touch points. It also made things more time-consuming, redundant, and very costly to process. So upon learning that their current AP solution was being phased out, they began an exhaustive evaluation of available solutions, and topping its criteria for new AP solution was that tight integration. And they wanted to make sure that whatever they got provided real-time access to the information. So ASSA ABLOY selected an AP solution that did just that, and also was able to reduce the learning curve, as there were less steps in the process and therefore less exceptions to manage. Overall, invoices are now automatically entered into ASSA ABLOY's system after scanning and providing remote workers with the instant access to that invoice information. The integrated AP solution enabled users to access all of the account-related documents, including the PO, the check, and those ad hoc documents that we talked a minute ago about with electronic storage. And as a result, all the account-related documents are now uploaded and attached to the invoices during the coding and approval process. So now those users had that full access to be able to make the decisions they need to in an efficient manner without having to go assemble it and gather it from other places. So we work our way to the last piece of the four components. We're talking about reporting, and reporting tailored that's specific to the needs of the different stakeholders. And as we drill in here, you'll see that nearly 60% of organizations are facing greater demands for real-time visibility into their AP department financial information compared to 2 years ago in one IFO report. Now, to make the right decisions with regards to investments or, say, financing and budgeting, CFOs need full visibility into accounts payable, which is lacking. In fact, in one other study, 6 out of 10 organizations believe that their cash flow forecast has either significant or major inaccuracies. So imagine being able to try to make good financial decisions if that much of the data that you're getting is inaccurate. So CFOs aren't the only stakeholders who need access to the information. Controllers, treasurers, procurement leaders, they also require the same level of access for their specific needs and requirements for their job. Now, the majority of organizations currently track and report on cash flow against current future expenses, and this problem is felt worse with non-PO-based activity, as AP has no ability to determine what has been procured and what remains to be paid, meaning that businesses can be inundated with a batch of invoices at the end of a month or even a quarter. So once again, as I said earlier, you don't know what you don't know. So if it's just sitting out there until it shows up, you can't have access or visibility to it. And without access or visibility to those liabilities, unexpected invoices can cause headaches, particularly if they arrive after a financial close and necessitate adjustments and correct financial statements. And for these reasons, 40% of organizations identifying improving AP reporting and analytics as a top priority according to another study by Ardent Partners. So we see the different analysis and the issues without having access to that information and reporting. So by leveraging an integrated AP solution, authorized users such as those CFOs, those controllers, and those other folks, they can get instant online access to financial information at virtually any point in the process through a portal, and they can do that using dashboards or a library of standard reports that offer real-time visibility into the accounts payable operation. Now, bundle reports are key because if they're included with an AP solution, then that'll help provide a quicker way to get that comprehensive view of not only transactional data passing through the system, but also analytical information such as productivity and audit data. Enhanced reporting provides sophisticated options for viewing and analyzing system data, and in most accounts payable systems, reports can be customized or added as needed. Because clearly everybody has their own particular needs, so being able to customize and tailor them is critical. CFOs can use these tools to access organization-wide spend visibility, AP cash flow, AP process metrics, and as well as different KPIs. So if we look at another customer study, we can see here that Taggart Global, who builds and operates state-of-the-art coal preparation plants and material handling systems around the world, they have 14 permanent utility sites. They are also constructing 20 to 40 new sites around the world at any given time. And each of these sites works with multiple vendors, resulting in more than 30,000 invoices per year. So unlike the first example that was 700 plus thousand, here's a customer with just 30,000 a year, but yet still having a lot of issues around that visibility and access to that real-time information and reporting data. And Taggart's what we saw there is they have 3 accounts AP clerks who also process between 80 to 100 expense reports a week, which obviously is another component of AP processing as well. So sending and receiving a large number of invoices through the mail resulted in inaccurate reporting, and at the end of each month, and it made the auditing a headache for them. So after an evaluation, Taggart was able to select a solution, and with that, they were able to work with its proprietary project management software and seamlessly integrate with the company's Dynamics platform as well to achieve these benefits. Now, Taggart's AP staff has a full visibility into invoice processing and as well as the expense reporting at every stage of the process. Invoices and expense reports can easily be tracked, and the problem of lost invoices has been essentially eliminated. And being able to report in all this information provides accounts payable staff and project managers with that financial and operational insight they were looking to achieve. And additionally, project managers have a self-service portal access to these documents, which reduces the number of inquiries to the AP department as well. So we looked across those 4 different components, and I wanted to spend a few moments getting you a little bit more familiar with Bottom Line, the organization, because we have helped all 4 of those organizations in those different scenarios that we talked about, specifically addressing those 4 key components. The paper was the crux of the problem with all of those, and by introducing workflow, it was a real-time integration, as well as being able to report on the analytics. We were able to help those organizations achieve a lot of automation and cut costs. But bottom line as a whole, if you're not familiar with us, we provide payment, invoice, obviously, and financial document automation solutions to companies around the world. And we've done this with an array of different solutions, such as an AP automation solution. We span different lines of businesses and different verticals, different industries, and ultimately to support and delight our thousands of customers that you see highlighted here all around the globe, with our presence in both North and South America, Europe, Middle East and Africa, all the way to the Asia-Pac region. Our worldwide headquarters is in Portsmouth, New Hampshire, and as I mentioned, we have those offices all around the globe with setups in Reading and in the UK, as well as down in Australia and Singapore. With that, I know in the Microsoft Dynamics space, it's important for all of you on this call to know that we're heavily invested in the Dynamics community, as you want to make sure that the organization you're working with has not only a best-in-class solution, such as Bottom Line's Transform AP solution, but we also want to make sure that we've invested in those different areas to be viewed as a leader, and as well as working with in the community. You'll see here that we've got a number of different credentials. We know it's a big part of when you go to validate the vendor you're doing business with, that we're vested in that. And you'll see that with those different partnerships that we have, the user group community, all those different certifications that we've achieved, that you could rest assured that you have confidence in our ability to deliver and meet your personal needs. Now, as we work to wrap things up here, I'm going to leave this slide up. This has some contact details about how to reach out to Bottom Line. Obviously, this session was just focused on the AP process alone and how we can help financial executives leverage their Dynamics AX with AP automation to address a lot of their different business needs and objectives. We have payment solutions with cash management, online payments, vendor payment portals, etc. So you're welcome to reach out and learn more through our website or contacting us in one of these different means here, whether it be by phone or email. Go to, like I said, our website. I'll leave this up as we wrap up the session itself. We're just about 35 minutes in, which is good. And I wanted to leave some time here for anybody to ask any questions. As it was mentioned at the top, we would have questions submitted through the Q&A and or the chat. So I'm going to pause for a moment, and I'm going to bring up both my Q&A panel as well as my chat panel to see if any questions have come in, and I'll answer them accordingly. All right, so I have one question that came in that talked about the workflow piece, and specifically about when it comes to routing and approval, is there the ability to address approvals through a mobile device? And the short answer to that is yes. Basically, we all know that mobile technology is at the forefront of all of us today in terms of how we access information, whether it be through tablets and mobile phones, et cetera. And yes, we can support mobile approvals, so you don't have to be tied to a computer, much less access a portal per se. Rather, you can just from your mobile device, get notifications, reminders, and things of that nature so that you can approve right from that device. And the benefit of all that, of course, is it can happen whether you're traveling or your project manager out of the site or what have you, and it's happening in that time, real time, and it's happening right away. We have another question about, do we have presence in India? We don't have presence in terms of staff in India per se, but we obviously have our offices in the Asia-Pac region that support that area. So we can connect you with those folks, and we have teams of people who cover that region, and be happy to hook you up with the right personnel. I have another question that came in around the matching process. There was a talk about straight-through processing, and wanted to know a little bit more about that. So when you talk about straight-through processing, that's usually associated with PO-based invoices. So if there's companies who raise purchase orders up front and get the approvals up front for the goods that they're going to be ordering, and then naturally they receive those invoices. And when those invoices are received, they ultimately get when they're after the receipt in the system, the invoices come in. The question then lends itself is can those lines on the invoice be matched up with the lines that have been receipted, and if everything is perfectly in match and within tolerance, better yet, then can it just go straight through? Is there really the need for somebody to sit there and touch and look at it? And our solution, Transform AP, does support that. And so you may recall from one of the customers there that was actually achieving straight-through processing. That is exactly what they were able to do, was leverage our solution to capture not only the image, but capture the line item detail right down to the quantity, description, unit price, etc. And then we can match it specifically against that corresponding line data in Dynamics. And if all of those things fall within tolerance, there's absolutely no reason for a user to touch the invoice. And if you're a very PO-centric organization, that's ultimately one of the things you should be striving for, because that's going to reduce a lot of your time, effort, and cost. So yes, the answer is that you can achieve that, and that is how it gets done, and we certainly welcome the opportunity to showcase that and talk to you more about that. Trying to see if any other questions have come in. I had a question that just popped up about what is the limit in terms of how many invoices a system can process on a daily basis. Well, I think the answer to that is really the capacity of the infrastructure. So, and there's really no limit to that per se. I mean, you saw that one organization we highlighted that has 750,000 invoices a year that are being processed. So with that said, it's really now about setting up the appropriate infrastructure to push that volume of data through. And with that, everything else still just falls into place. So it's more of a technology and infrastructure topic and discussion more so than a limit in terms of a capability. So there really isn't one. The vast majority of customers that we see are, we range we've seen as little as 5,000 invoices a year, all the way up to that example of 750. But by and large, majority of customers are certainly probably in that 30 to 60,000 range. But and then it kind of just gets to be more sparse on the upper end or lower end of that. Okay, so let's see what else we have here. If you, any of you on the call are work as a partner in this market, we certainly welcome the opportunity. We have a host of different partners that we work with, both from a referral and a reseller standpoint. So we again welcome that opportunity and have further conversations. I'll wait another moment to see if another question or two pops in. I have a question that just popped up about the capture process. To summarize it, it's basically asking what is the process for how things get set up to capture that data. And what I believe they're asking there is when we talk about the scanning process, the ability to take technology and automatically lift, if you will, the information from that document. That's done utilizing what's called OCR, optical character recognition. And by doing so, when invoices come in, users and just AP specifically don't have to sit down and manually key everything in. So having a solution that learns on the fly, which Bottom Line's Transform AP solution does, it can actually learn the information on the invoice, not just the header data, but even down to the line item data. That can eliminate lots of manual data entry and then further streamline the process. So the ability to capture that is critical, and one that you should look at being a part of your solution in order to help streamline the process. I don't have any other questions that have popped up at this point in time. At this stage, Jason, I guess what I'll do is leave it at this stage to have you conclude things here. I believe the presentation will be made available to the forum, and as I said before, there's the contact details here. You're welcome to reach out, and we'll look forward to trying to connect with you as well, and then have further discussions. At this point in time, I thank you for everybody's time today, and with that, we'll look to connect here soon in the future.
Great, thanks, Dave. And as you said, we did record today's event. We'll be making that available. We do have a survey that will pop up after you close out of today's event. We really appreciate any feedback you want to give us or to our speaker, David Leonard. It's always helpful. With that, we will conclude the event. Have a great day, everyone.